throw off their skepticism or throw off their, the taint that crypto in general and the crypto bros have brought to this whole area, and read some of the Bitcoin maxis, read my book, read Lynn Alden's book, read Saifedean Amos's book, and try and understand why this is actually a technology and an invention that, to me, it's like I was a big investor in the internet, and it really reminds me of the internet. I mean, and it's a parallel. I mean, it's actually the monetary version of the internet, right?
Hi, everyone. Welcome to Smart Invest. Larry Leppard, founder and managing partner of Equity Management Associates, believes Bitcoin could change the global financial landscape. In his latest prediction, Bitcoin could reach $300,000 to $500,000 in 5 years, $1 million in 10 years, and $7 million per coin in 20 years. Leppard and analysts like Fred Krueger use the power law curve to explain how Bitcoin's price accelerates as adoption and capital inflows rise. In contrast to linear growth models, the power law suggests that each new user or dollar entering the network compounds, raising price exponentially. But Leppard continues. He believes this powerful model may not fully predict what's coming. The US dollar, which he sees as structurally failing, is losing public trust, and he predicts a tipping point where the masses will turn to Bitcoin as a lifeline rather than an investment. This shift could cause demand to soar that the power law model cannot handle it. Bitcoin would overwhelm expectations at that point. Leppard claims this is about generational trust, value, and wealth, not profits or price targets. Bitcoin could absorb trillions as financial systems weaken. That transition could cause a parabolic rise that no chart or historical pattern has fully predicted. He believes Bitcoin will break every model, including his own, and rise. Bitcoin is still young, and what comes next could be unlike anything the financial system has seen.
Sure. Look, they're both good. I mean, the way they're both sound money. They're both money outside of the state. The state can't print gold. The state can't print Bitcoin. So they both have a lot of things going for them. Mm-hmm. Gold is analog. Bitcoin is digital. We're moving toward a digital world. And, the bottom line is that when Bitcoin came along, what they invented when they solved the mathematical problem that allowed, that stopped double spending and allowed a fixed number of something digital to be controlled and audited every 10 minutes. When that came along, it changed the game. I mean, even gold, as sound as it is and as good as it is, we increase the supply by 1.7% every year and above ground. And in 45, 50 years, we'll have twice as much gold on the planet. So, Bitcoin, there will only ever be 21 million. So it's a natural deflationary money. I believe that it has the potential to be the base layer of money because it's easier to verify, it's easier to move. I mean, moving gold around is hard. Verifying gold is not simple. There have been counterfeit gold bars, etc. And, basically, it's not transparent the way that the Bitcoin ledger is transparent. So that's the biggest difference, I think, between the two. The other thing that's going on that I think is going to drive the value of Bitcoin so much higher, everyone who wants to own gold, I mean, gold's been around for 5,000 years. Everybody knows what it is. Everyone knows it's money. It's the base layer of money. But, because of that, it's very widely distributed. It's not like it's some great secret. Yeah. Bitcoin is an emerging challenger to gold. I call it digital gold. I think it really does have the properties of gold, but it has some other properties as well. The transferability and the way you can see it on the ledger. It allows, Bitcoin is undergoing an adoption curve. And as you and I both know that, not everybody in the world owns Bitcoin today. In fact, a small fraction of the world owns Bitcoin today, but I believe that fraction will grow as more and more people come to appreciate its monetary properties. And so, in my opinion, Bitcoin will someday perhaps be the base layer of the monetary system. And it's interesting. I'm not the only one who said this. I don't know if you saw it. It was on the Twitter yesterday. Larry Fink at BlackRock, they just wrote their annual report, and they said that, Bitcoin is actually a challenge to the reserve status of the U.S. dollar. And I thought, BlackRock's one of the largest asset managers in the world, and here they are actually saying what I believe. I thought, boy, that's interesting. And so, I think it's important. I really highly suggest people who are skeptical of Bitcoin that they read my book and try and understand the argument that I put behind it. I do believe it's the most asymmetric thing I've ever seen, and And more importantly, I think that, a lot of the reasons it's been demonized have to do with kind of the crypto Sam Bankman-Fried, arm waving, promoter, rug pullers in the whole crypto space. I mean, look, gold people are very sound based people who tend to be quite conservative, and they don't fall for bullshit. And so, the average gold person, I think, and I count among, I have many average gold friends. When they look at Bitcoin, I know their reaction is, oh, that's all just arm waving and bullshit. And I say, well, it's a little more complicated than that, or it's a little subtler than that. All the crypto stuff, you're correct. You're dead ass right. It's rug pulls, arm waving, bullshit, fraud, Sam Bankman-Fried. But when the guys who invented Bitcoin, whether it's one guy or a bunch of guys, we don't know. But when Bitcoin got invented, what they did was they created absolute digital scarcity. And you might say, well, why does that matter? Well, it actually does, because it's provable, verifiable, provable, auditable, visible digital scarcity. So for the first time, really in the history of mankind, we actually have a form of money that will not be diluted. We've never had this before, ever. I mean, even gold gets diluted. So that's different. And I think it means that one has to think about, what does that mean? I mean, it'd be like asking a caveman, what does an airplane mean? I mean, he doesn't even necessarily know how to conceive of what flight is, and the notion that we're going to have a Concorde going across the country, across the ocean in 3 hours, that's way beyond his imagination. And so, I'm not even sure any of us really know exactly what Bitcoin means, but what it does provide is it's a ledger that is completely truthful, honest, and mathematically based that anyone can see. And I think the implications are going to be really big for money and for other things too. So, I really highly encourage people to throw off their skepticism, or throw off their, the taint that crypto in general and the crypto bros have brought to this whole area, and read some of the Bitcoin maxis, read my book, read Lynn Alden's book, read Saifedean Amos's book, and try and understand why this is actually a technology and an invention that, to me, it's like I was a big investor in the internet, and it really reminds me of the internet. I mean, and it's a parallel. I mean, it's actually the monetary version of the internet, right? So, the adoption, all of it, the skepticism. People were very skeptical of the internet in the beginning. You remember Krugman saying it's no better than a fax machine. People don't have anything to say to each other. Who needs the internet? That's what he said.
According to Larry Lepard, although the general trend of Bitcoin's rise is predictable, more precisely, a power law curve where its price rises as adoption and capital inflows increase, a much more significant change is imminent that has the potential to upend all current models. Although he acknowledges that this model does a good job of charting the historical development of Bitcoin, he cautions that it has its limitations. Leppard believes that the collapse of global confidence in fiat currencies will be the true turning point. He predicts a mass awakening, a time when people realize their money is rapidly losing value and turn to Bitcoin as a safe haven. As governments continue to mismanage monetary policy and inflation worsens, he claims that at that point, demand will not only increase gradually, but will also sharply increase. The power law model, which presupposes a reasonably predictable rate of price growth and adoption, will no longer be relevant. Rather, the price of Bitcoin will increase rapidly and without warning, surpassing any predictions based on historical trends. Leppard estimates that, depending on how governments around the world react to the growing monetary instability, this paradigm shift will occur sometime between 2030 and 2035. He thinks the shift to Bitcoin will be quick and overwhelming if they are unable to rebuild trust in fiat systems. Leppard's message in the interim is unmistakable. Don't wait for the masses. Before this tipping point occurs, he exhorts people to get off zero and own at least some Bitcoin. Early positioning is still possible, but it won't be available for long. According to him, the groundwork for this impending financial revolution is already being established, and Bitcoin's price action is already displaying indications of renewed momentum.
That's a totally great question. What they've got to understand is that it's very early days and it's emerging. And so on very good days, it's going to the moon and we can't stop it. And on very bad days, Bitcoin is dead. And, Amazon is up 218,000% since the day it went IPO, and yet it went down 50% on a regular basis. After 2008, it went down 90%. And so when you've got something new, untested, emerging, unproven, you have emotions run high in both directions. We got to have it, Let's push the price way up. Oh my God, it's not working. There's a risk to it. Let's throw it the hell out. And
Mm-hmm.
so, so yes, it's highly volatile. And for a lot of my clients who don't like that volatility, I say, fine, stick with gold. You'll be fine. You'll be protected.
Yeah.
But what I try to suggest to all people who I speak to is the way one, as an investor, the way one deals with volatility, especially if it has a strong upward skew. And you're right, it's drawn down 50%, 70%, 80%. But guess what? It then comes back and goes on to make a new higher high. And in each drawdown, the low that it hits on that drawdown is above the prior low. So it's trending up with a lot of volatility. And in my opinion, the way an investor deals with that is your allocation size. So, would you want to put 100% of your money in Bitcoin? Of course not. That'd be crazy at any age, right? But, if it's got a positive skew over a bunch of years and you believe in the concept, can you take 4% of your net worth and put it into an asset that'll go down 50%? Sure, because you're not likely to sell it when it's down 50. You'll just hang on to it knowing that it'll eventually go higher. And so that's really, in my view, the way that investors should deal with the volatility is their allocation size. They should put into it what they're comfortable having in an asset that they know can go up a lot more than gold, but they also recognize can draw down 50%, because gold has never drawn down 50% in a year or in a cycle. A big drawdown for gold is 20%, and that only occurred right after the 1980 bubble. So in general, gold is up. 65% of the time, gold is up up on the year, and then the other 1/3 when it's down, it's not down very much.
Yeah.
Recently, just this morning, there was announced a huge purchase of futures that look like they intend to take delivery on them. I mean, there appears to be a little bit of a scramble for gold. I mean, it appears like we're entering a gold bull market, and it's quote unquote on. Now, that doesn't mean we won't have drawbacks. Of course we will, but I think that what gold is very good at doing is sniffing out future monetary debasement. I mean, it did it in 2018. It started moving before COVID, and then COVID came along and it really moved. And so I think what gold knows is that the monetary system is broken, and that governments will sooner or later be forced into printing money, and it's just front running that move. I think these big buys, by the way, they could be governmentally driven, but I actually tend to think that if you look at it, Jeremy, there's about $950 billion in quote unquote wealth worldwide if you add real estate in there. So call 450 of that, bonds, stocks, cash, art, all that kind of stuff. The other 450 is real estate. A lot of that wealth, I think, is kind of thinking, they're printing a lot of money. There seems to be inflation that might continue. Monetary debasement's a serious risk. Maybe I should own some gold. And the gold market, by comparison, is tiny. The total market cap is about 20 trillion, but really only about 10 of that's available, because the other 10 is either in a central bank or on a lady's neck or in a museum. So it's actually less than 10. It's more like 6 or 7 is available for purchase. So 950 trillion in assets, a sound money market for gold of 6 or 7 trillion. Well, if only 5% of the 900 says, gosh, I want to protect myself, that's 45 trillion dollars. And that's chasing a $7 trillion market. So what's that going to do? That's going to push that gold price up.
A sobering picture of the global financial system is painted by Larry Leppard's most recent market analysis, which implies that the growing interest in hard assets like gold and Bitcoin is a defensive reaction to a deeper structural unraveling rather than merely a return chase. Leppard claims that instead of responding to transient market fluctuations, investors are shifting their holdings in preparation for a much more significant event: the dissolution of the current monetary system. He identifies increasing dysfunction in a number of financial sectors, including commodities beginning to resurrect after years of stagnation, long-duration debt under pressure, and distress signals from the bond market. These are signs of a system that is starting to buckle under the weight of its own excesses, not isolated incidents. Leppard believes that central banks have run out of options. The system has reached a tipping point where conventional remedies, rate cuts, stimulus, and balance sheet expansions, can no longer address the fundamental issues brought on by decades of easy money, artificially low interest rates, and unrelenting debt growth. Leppard cautions that we are on the verge of a new financial reality, in which the regulations that have regulated markets for the past half-century are no longer relevant. Hard assets like gold and Bitcoin will be more than just hedges in this situation. They will be lifeboats. More money will move into assets that are impossible to print, manipulate, or default on as confidence in fiat currencies declines and central banks' efficacy wanes. For Leppard, this change is already happening and won't take place in the future. And the people in the best position to protect and increase their wealth in the tumultuous years ahead are those who recognize the warning signs now, before the complete collapse is evident.